Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about Tradespoon tools, current market conditions, and any questions you might have about your Tradespoon subscriptions. I also will cover some of the Yellow Tunnel tools, sister company of Tradespoon. So if you're a Yellow Tunnel subscriber, just let me know, and we will go over those tools as well. All right. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. Very proud of that experience. Since I left Options Express, I work as a consultant investor in several financial technology firms here in Chicago. I've been trading and managing my own money for over 15 years. I want to take this opportunity to say thank you to all the Tradespoon subscribers. Because of you, I'm able to do what I enjoy professionally. Trading, mentoring, and teaching Tradespoon subscribers. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures: trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. I forgot my camera. Okay, 1 second. All right, perfect. All right. So before we go talk about trading system, let's talk about where the market is heading. Let's look at bar chart, our friends from bar chart. So market slowly continuing making all-time highs. I think still everybody's waiting for phase 1 agreement and the scope of that and whether the tariffs will be imposed on December 15th or not. But market has been resilient to any negative news. So unless negotiation between the United States and China will fall apart, I think the trend until the end of the year is to continue going higher. So that's the trend. If you're an aggressive trader in terms of pullbacks, I think there will be shallow. Currently 310, day trading probably 313 is your support. That's the high here. If you're a more aggressive trader, 310 psychological level, but also going back to probably middle of October. This is a very strong support, and then the next level of support is 50-day moving average is 302. So I think you will find a buyer stepping in at 310 if there's a pullback to 310. I think the only way we'll retest 50-day moving average if the phase 1 agreement is not reached, right? Or the perception that the scope of phase 1 agreement is not something that people are looking for. But those are the levels I would keep an eye. Until we reach 309 or 302, I think the path of least resistance just to continue going higher. Some of the indexes that I usually look is US dollar. That's a good indication of where the market is heading. Looks like this overhead resistance at 90, probably around 98, 99, but you can see this is going back to May high, June high, July. So there's a lot of overhead resistance. Short-term US dollar is in correction. I think that the pattern of lower lows and lower highs, I think, will continue. This is kind of A, B, and C pattern. You have A, B, and then probably have another leg to the downside on US dollar, and that's the good indication where the market is heading. And I would probably look at it as a forward-looking indicator. As long as the US dollar is weak, conglomerates, resources, minings, financial sector will continue to lead the market to the upside. Treasury, definitely important. We had a very strong rally this year. Right, it was uncertain going into the August. Now also in correction, making lower highs and hovering at the 50-day moving average. As long as the treasuries are under pressure and yield is heading higher, I think that's also bullish for cyclical sectors, and money will flow into cyclical sectors. Utilities and consumer staples have been kind of following the treasuries. They've been in correction, money been flowing out of the defensive sector into consumers, into the cyclical sectors. So you can see utilities, consumer staples, financial REITs, similar patterns where they are underperforming the market. In terms of sectors that are leading the market, these are the cyclical sectors: technology, semiconductors, probably one of the strongest sectors that are leading the market right now. So you see a strong breakout of the 124 level, and semiconductors are continue to lead the market. Biotech, small cap stocks are also leading the market and broke out. You can see small cap biotech broke 115, continues to head higher. Russell 2000. Just broke out of 160 range, making 52-week high. And industrials. Also broke the 52-week high, continues to higher. So in XLF, financial sector. So these are the, so this is where the money is floating from defensive sectors into more cyclical names. And we already talked about which sectors are, as of right now, leading the market. In terms of trading psychology, let's talk about, now that we talk about market, let's talk about trading psychology. Obviously, my opinion is a little biased, but I think we had a great webinar with Dr. Maneker, probably one of the better ones. So I encourage you to go to Trading Discipline on the recorded webinar, just posted the developmental stages of trader psychology. Very interesting topic, talks about 4 stages of trading psychology. Very important to recognize there are stages that every trader is undergoing through, and you want to figure out where you are in the path, in the journey as a trader. Are you in stage 1 and 2, kind of a beginning trader, where you're still trading on the impulses, you're still trading on the biases, or you grow going into stage 3 and 4. And stage 3 is where you start accepting that not always, you'll be able to predict the market, and sometimes you have certain streaks, right? You're on a tilt, or you have a great great track record, let's say in 2019. And then the final stage is where you become, you get to a true discipline, where you kind of build this intuition as a trader. So very interesting webinar. I encourage you to view that. We also have market plan, different topics. We're talking about trader decision-making process. I also encourage you to review this. So trading psychology is important. I encourage you to open up an account at Yellow Tunnel and look at some of these topics. They're very important to understand. To be a successful trader, you have to understand trading psychology, and I think you have to understand that there are stages that you will undergo, and very important to determine which stage you are and how do you get into the next stage. So that's trading psychology. What else? You can register for the next webinar here, upcoming webinar. We'll talk about, we don't have a topic yet. I have to update this, but every December 18th at 3:30 on Yellow Tunnel. All right, so that's trading psychology. How do you trade in current system, in current environment? On the webinar, we talked about there's certain things that you can control and certain things you cannot control, right? You cannot control the inflow of the news. You cannot control the reaction of the news. Same news that happened in August would cause 5% sell-off. Same news in November causing the market to sell off 0.5%. So those things you cannot control. What you can control are, I always put them in 4 buckets. One is cash. Cash is very important, right? So 30% of your portfolio should be in cash on average. Depending on your trading psychology and how aggressive you are as a trader, it could be less, it could be more. This is where you probably do want to have a financial advisor who can evaluate and help you determine what is the appropriate level of cash in your portfolio. And that's something you can have a control over. The second lever that you can control is portfolio drawdown. Complacency is one of the feelings that I always talk about in a live trading room environment. You don't want to be complacent when market is continuing to go higher. It's been, a couple of months, the market continues to go higher. Personally, I started getting complacent, so this is where you want to recognize that feeling and still follow your trading plan. Portfolio drawdown is probably the second most important item on my list, is to make sure that you always review how many positions you have on daily basis, or at least on weekly basis, and what is your maximum stop loss? What is your maximum loss on each position? At Tradespoon, on average, we basically allocate 5% of your portfolio into any given trade, and maximum loss is 50%. So if you have 5 positions, 5% each, and you have 25% allocation, 50% stop loss if you're trading options, then your portfolio drawdown would be 12.5%. And this is something that you need to adjust, whether for somebody maybe 20% is appropriate, for somebody maybe 5% is appropriate. Again, it all depends on your background and where you are in your investment career. If you're trading stock, the same thing. If you have 5 positions and let's say you allocated 5% to each, 25%, and you do 10% stop loss, then maybe your portfolio drawdown is 3.5%. If you're 100% allocated in stocks and you have 10 positions of 20 positions, 5% each, and you do 10% drawdown, then your portfolio could be down 10%. So this is the math that you should go through and decide what are appropriate levels. So those are the first 2 things. The next 2 things is trade based on probability of success. Every time you have a trading setup and you enter in the trade, you should always ask yourself, what is the probability of success? And then the 4th thing, you should always ask yourself and put it in your trading journal. You should document it in the trading journal. What is the return on capital? What are my stop losses? What are my target gains before you get into the trade? So you can see what are the appropriate levels of exposure that you have. So you always want to get into a trade where, maybe you do 1-to-1 risk versus reward, maybe you do 1-to-3, depending on how aggressive you are. But those are the trading setups, and for each setup, the higher return on capital you're looking for, the lower the probability of success will be, right? Unfortunately, nobody can design a system otherwise, where you have high probability of success, high return on capital. Those trades usually don't exist unless you have some inside information. So those are the other 2 levers that you can control. How much return you're looking for on individual trade, and how often do you want to be right. All right, so we're going to talk about this probability of success, the risk, the trend, and let's go to Tradespoon. So I like to think, I always go over different buckets or categories of services that we have. The first one is live trading room and live portfolio. This is probably 30-40% of our subscribers. They have either they have a full-time job or they're doing day trading, but they want to have exposure to our portfolios. Elite Trading Circle, this is a portfolio that consists of morning bell and closing bell. So we have live trading room, the first hour of trading and the last hour of trading. During those trading hours, we are trading signal from all of our models, whether it's a day trading models, weekly trader or monthly trader, whether it's Scott does calendar spreads, butterflies, trading stocks, all of the models that we have, we trade them during morning bell and closing bell. I also sync my brokerage account with this was the lead trader's log. So every time I trade, so all of the trades that happen, last 7 days from any model, you would actually be able to see them in the trader's log. So trader logs basically shows you all the models and every single trade that I do real time. As soon as the trade occurs, the message gets propagated to you either as an SMS alert, or you can go in and actually view trader log, or do both, right? So you get an instant text message every time I trade, and you can go to trader log and actually see the messages. So that's Elite Trading Circle. So it consists of morning bell, closing bell, and trades that I do during the day. The second, if you don't have, if you're not trading full time. You don't trade during the day all the time. The next portfolio is premium portfolio. Consists of both. You have a choice: stock, option, or option spread. This is an example of a Square trade that I placed the trade on November 25th. Again, you get email and text message. Entry price 677.75. You can see, the chart of Square, how it's moving along, and then you have a choice. You either trade stock, option, or option spreads based on your comfort level. I personally trade option spreads. So we have another execute service at Trading Block, and you can see all of the trades on November 25th. The trade got filled, and the current price and the price. So that's the premium service. You have videos, nightly videos that you can see the reason why I got into a trade. You can get emails and SMS message. You will get email and SMS message every time I trade. I trade spreads, one new trade a week. So you have 4 trades a month. So that's the premium portfolio. The next portfolio, we talked about live trading room, which is part of Elite Trading Circle. These are premium portfolio, Vlad's portfolio, that allows you to participate in live trading room. Again, if you want to have exposure to my trading style and Scott's. And the next portfolio is Robo Investor. Robo Investor, similar to premium, there's 4 trades a month, on average 1 trade a week. This is where I trade stocks. You can do cover calls, some people do leaps, some people do calendar spreads. I personally trade stock. The advantage of trading stock is that you don't pay time premium, and you don't have to, even if I'm not correct on the time, as long as I'm correct on the direction, then the trade will go profitable. And you can see the performance of all of these Robo Investor trades and live trading performance here. Same thing, you have on average 1 new stock a week. You get emails and alerts every time I trade. You can see positions, you can see orders, and then you have different tools that are part of this membership. So that's Robo Investor. If you guys have any questions, please let me know. So the purpose for today is to make sure that I do answer any questions that you might have. So this is live portfolios. We have premium portfolio, you have a Robo Investor portfolio, and then you have portfolio that are managing a live trading. So you have 3 different portfolios. Very important to always look at your portfolio drawdown. The intention is not for you to trade all 3 portfolios, even though I know some people do that. I guess if you have a larger portfolio and you allocate maybe 2% of your portfolio then it's fine. But if you trade Robo Investor portfolio and you trade every stock and you have 20 positions, and you trade all of the live trading room, then most likely you're over leveraged and you're using margin, and that's not good, right? That's not the intention. The intention is based on your trading level, based on your background, you pick 1, 2 portfolios, or if you trade in multiple portfolios, just make sure that you have a large portfolio and you still have 30% of your portfolio in cash. Day trade, and then so that's live trading. So these are live trading room and portfolios that are exposed to you via emails and SMS messages. And then the next level of membership, people that don't need or just looking for more trade ideas, and they want to pick and choose which trades they want to take. So we have 3 different models based on different time horizon. For people who like to day trade, more aggressive day traders, make quick decisions, hold position for 1 or 2 days, we have active trader. For somebody who's doing a weekly trader, hold the position 2 to 5 days, we have a weekly trader. And then someone who is holding position for on average 20 days or longer, then it's monthly trader. So let's do it in reverse order, this time monthly trader. So if you're more of a longer term trader, on November, every week on Sunday, you get email and SMS that basically says, hey guys, we have 3 bullish and 3 bearish trade ideas. Our suggested entry price is 37.19 or 38.33, based on how aggressive you are as a trader. You can wait for predicted low, 37.19. Let's look at what happened November 25th. So 37.19 never reached, or 38.33. 38.33 did reach. So if you enter the stock at 38.33, by now you would be up roughly 50 cents. So 1.25%, 1.5% up. So that's the design of this model. It's a longer term model. Here we're looking for 5% target gain in the next 5 to 20 days. Some people look for 5%, some people look for 2%. I usually look for 1 or 2%. You can actually see, not only do we provide these signals, but if you go to a lead circle, look at the trader log and type in Pfizer. Pfizer has been on our radar for a couple of weeks. Originally I entered it on November 15th, actually. This was also signal on November 15th. So I entered at 209 and now it's trading at 250 to 55. So about 20%, 30% profit since the original entry point. So, and I trade option spreads, right? You can read the commentary. Monthly trader, XLD broke 52-week high, seasonal chart for trend. I usually do 50% stop loss, 20 to 40% target gain in this environment. So this is an example of the Pfizer monthly trader. Again, those two levers that you control, either return on capital or probability of success. If you waited for 38, 33, you basically that's the previous session close, then you would have more trades. You would be considered more aggressive trader. You would have more activity in your account, but your percentage of winning trades will be smaller, right? So if you wait for predicted low, you would trade less often, but you have higher percentage of winning trades. So depending on where you are on the spectrum of risk taking and based on your personality, you might choose strategy A or strategy B. If you want to leverage your account and trade options, then 100 shares of Pfizer at $35, you have to invest $3,500. So you have to have a larger portfolio. If you don't have $3,500, if $3,500 is not 5% of your portfolio, then the other choice is to trade options. One contract, 100 shares at 220, then you invest in $220. So you're risking a lot less. Your risk is well defined, $220. You can actually mitigate that risk by doing the spread, right? I don't trade single option. I actually trade spread because, what is the probability that Pfizer will reach 38, 39 level? Well, here it did, but I'm buying deep in the money spreads. You can mitigate. So instead of $220, the point is you can risk even less by doing spreads. And always question, how did you determine the strike? It's deep in the money calls. In this example, monthly strike, and I just take the price of the stock, 38.33, I think it was 38.33 or 38.20, and then minus 35. So that's how we got to $3.35, right? Previous close. So 38.30 minus 35, that's how we got to 3.35. So we take deep in the money call. We want to minimize the extrinsic value, and the holding time is anywhere from 5 to 20 days. 5% target gain, 5% stop loss. I usually look in trading room environment, probably 2.5% on average. So again, by looking for high percentage winning, higher return on capital, your number of winning trades will be less. You can look for smaller return on capital, your percentage of winning trades will be higher. So that's the monthly trader. Let me know if you guys have any questions. You guys hear me? Usually I get a lot of questions. I don't see any questions. Just let me know if you guys can hear me. Maybe after Thanksgiving dinner, it's hard to ask any questions. All right, Robert, perfect. Thank you. All right, thank you. Robert, thank you. Okay, so that's monthly trader. Weekly trader. Weekly trader also, every Sunday, a different model runs, optimized for 5 days. The advantage of these services is that not only do we run the model that gives us a signal and probability of success, we also have another model that runs and basically says, in the past, which are the stocks this specific model is best suited for, right? One model cannot predict every single stock, every single asset class equally well. So usually what a lot of hedge funds are doing, for different asset classes, for different types of trading, they're designing different models. So we're taking a very similar approach. We're realizing that not one model cannot make all the stocks predict equally well. we're optimizing different models for different time horizons. So this is a weekly trader. Basically on Sunday provides 3 bullish, 3 bearish trade ideas. This is Bristol Myers idea on November 25th. Either buy at 54.76. I don't think it entered 54.76 or 56.45. If you entered at 56.45, by now you would be up, similar to Pfizer, 75 cents. But the time horizon is 2 to 5 days. What did I trade? I did trade Bank of America. Right, I think I did trade Bank of America last 30 days. So similar process, I would trade debit spread, right? I would buy, I think I bought it at 73 cents. This was signal also November 15. I would buy it for 73 cents. And in this example, I think I closed for 98 cents. Right, so this is a weekly trader. Both monthly trader and weekly trader, I trade option spreads because I want to buy deep in the money spreads. In case I'm wrong and the stock doesn't go up and just flat or slightly down, I'm still going to be profitable. So I always go based on my personality and based on my style. I like high percentage of winning trades. And you know, for the past 3 years, you can see if you look at the performance, I'm targeting 75% accuracy. So I know 3 out of 4 trades to be successful. One of the topics we're doing in Yellowtown, the most common question. You guys want to know? Want to get? How many of you were at the developmental stages webinar? Any of you guys? All right. So that's your homework is to register. This is free, right? This is a free site. All the tools are not. I'm going to talk about aggressive trader. This is paid subscription, but all the webinars and all the videos, they're free. And the reason is because I realized that trading psychology, I mean, consensus is 50% of your success, but without recognizing different stages of trader psychology and the importance of psychology, it's very hard to be a successful trader. I mean, you can be successful for a couple of days, maybe a couple of months, but long term, especially when months like last year, December comes through, it will be very hard to be long-term successful trader. So what do you think is the most common question that was asked at the webinar? Anybody wants to take a guess? Nobody? All right. So the most common question was, I think we should stop doing these events after Thanksgiving because I think that Turkey will still people digest in Turkey. Usually on Friday I get a lot of questions, not today. All right. But the most common question is that people, how do you get disattached from the losing trade, and how do you not cut your winning trades short? How do you not become married to and psychologically involved with the trade? So that's probably the most common questions people ask. How do I not trade on my impulses? How do I let go the losing trade, and how do I make sure that I keep the winning trades? My answer to this was always, it's a trading system, right? You have to have a trading plan, written down trading plan. So in my case, my trading plan, I want to be 75% accurate, right? So 3 out of 4 trades, I want to be a winning trade. So then the question becomes, is this a successful trading plan? Not necessarily, right? Because 25% of the time, the trade goes against me. So then the question becomes, how do I structure my trade based on this probability of success? How do I structure return on capital to make sure that long-term, the profits are, the portfolio grows? So then I go to Elite Circle, and let's say Pfizer, right? Basically, my plan is to make sure that every time I trade, if I trade options, my stop loss is 50%, my target gain is 20 to 40%. So I know if I have one losing trade 50%, and let's say on average 3 trades 30% win or 20%, then I know every 4 trades, my portfolio, the 4 trades will go by 10, 20, 30%, depending on the situation. I know if I have a losing trade and all of a sudden I don't stick to it, and it's going to be, let's say, 75% or 100% losing trade, then I know that out of the 4 trades, I'm actually losing money. So that what allows me to be disattached from these trades and stick to my trading plan. And if I see 50% stop loss, I exit. If I see winning trade 15% or 10%, I know that 1 out of 4 trades will be one out of the 4 trades will be if there is only 10% and I have 3 winning trades and it's only 30%, and 1 losing trade will be 50%, that's also not good enough over long term. So by having concrete trading plan and be able to zoom out and take a longer term perspective, you are able to be emotionally not involved in every single trade. So that's kind of my secret to how to become more disciplined trader, and I hope you guys can share your strategies. Robert, so the question is, which one is there significance to how they're listed? Is one better than the other? I don't think one is better than the other. It's all basically on depends on your trading psychology, right? We actually have, let me see which one, risk spectrum, right? So we have a risk spectrum. So it depends where you are on the risk spectrum. If you're a day trader, then active trader is more appropriate to you. If you're longer term trading, it's monthly trader. I don't think there is better or worse. The first question is, what is your profile as an individual? Where are you on the spectrum of risk taking? What type of personality do you have? Some people will not do well on high stress environment where you have to make decisions very quickly, right? I mean, day trading could be stressful, right? You have to make decisions in split seconds, news come out, you have to make a decision, adjust, not be married to a trade call. And some people don't like this type of environments. So then active trader is not appropriate. Then you would do monthly trader where your signal comes on Sunday, you have time to prepare, review, you're not pressured, you put on your trade gets filled, and you have a few weeks to monitor the trade, right? So then maybe that's more appropriate. So there's not such thing right or wrong. Obviously, monthly trader, you trade a lot less often. Day trading, you trade a lot more often, right? So day trading, you trade a few times a day. Monthly trader, you trade a few times a month. So that's kind of the difference, is how often do you trade. Definitely, day traders trade a lot more often than weekly trader or monthly traders. Just because monthly trader takes a lot longer for your trade to come into reach your target gain or stop loss. Usually doesn't happen overnight. It happens on average 20 days. So thank you for that question. All right, so we talked about monthly trader, we talked about performance, we talked about weekly trader. So weekly trader is the same thing. We talked about, what did we talk about? Bristol Myers. If you want to leverage your portfolio, 100 shares of Bristol Myers, again, you have to spend $5,300. If you buy 1 contract, you only spend $235. So you have well-defined risk. You can have higher, your portfolio is leveraged, so you can have higher percentage of winning trades. Stock trades, we look for 2.5% profit. Options could be 30% profit, right? So higher percentage of winning trades. The only downside of trading options, not only do you have to be correct on direction, you have to be correct on time. Weekly trader, usually it's 2 to 5 days. So in those 2 to 5 days, you have to be correct. And if you're wrong, even maybe you're right on the direction, right? Maybe Bristol Myers will sell off short term, but then it will rebound. But if you don't trade appropriate time or contracts, then the trade will go against you. So that's the weekly trader. And then finally, active trader. Active trader is day trading. So you have 3 bullish, 3 bearish ideas. Today, one of the bullish ideas is IR, buy at 130.64 or 131.78. Let me see. What happened to IR? So open price was 131.26. 131.26. Okay, so if you waited for predicted low, you would not be in the trade. Right? Market is bullish, continues to going higher. Definitely, predicted lows are not getting reached. When the market continues making new highs. But yesterday's close, there was, so if you put an open price at 131.70, when the market opened 131, what did I say? 131.78, then by now you would be, well, depending on what price you got filled in the morning, but assuming 131.78, then you will be slightly higher by now, 131.90. Sometimes what I do, I basically wait for the first 15 minutes, right, for the price to get stable, right? So if you wait for the first 15 minutes, then maybe 131.50, 131.60, 70, you would get filled. Excuse me. So that's how you would trade active trader. Same thing, you either trade more often or you're looking for higher percentage of when you trade. And if 100 shares of IR, again, you have to spend $13,000. If you want to leverage your portfolio, then you would trade options. And one contract of 125 call would be $565 you would invest. So that's an example of active trader. You get 3 bullish, 3 bearish trade ideas. In the yellow tunnel, we actually start new tool called aggressive power trader. So these are the tools that I'm actually using in the live trading room environment. Sometimes people would ask me, Vlad, why you're posting 3 symbols, but you're actually monitoring 5, 10. So these are the watch lists, this aggressive power trader that we just launched on yellow tunnel. This is for more aggressive traders, right? If you want to see all of my entire watch list during the day that I'm trading, then you can find it in aggressive power trade. You get a watch list, you get a buy signal, sell signal, at which level do you buy them or sell them, and it tells you where you are based on our predicted price. Also gives you 10-day trend. What do we see? 10-day December, January trend and prior low, prior high. So that's aggressive power trader, the new service. How many of you are Yellow Tunnel subscribers? Anybody from Yellow Tunnel? All right. Okay, so that's active trader. So we cover active trader, monthly trader, weekly trader, seasonal chart. So the third bucket of membership is other tools. So seasonal chart. This is the tool that I'm using for long-term long-term trades. So you can see for spiders, the model runs on the weekend, again on Sunday, when all of the weekly and monthly trader signals get created. And you see for each of the stock or ETF, we run 4 independent predictions for the next 20 days, 30 days, 40, and 50 days, and then we take an average. Right now, 2 are higher, 2 are lower, so it basically shows that the momentum behind the bulls is kind of slows down. We predicted 311, we're already at 315, but 92% correlation. So you can see stock moving in very high correlation to historical prices, right? So you can see end of November, usually stock market goes up. We do have shallow pullbacks that we did have in November, maybe another shallow pullback right after the December, first 2 weeks of December, another pullback, and then Christmas rally, and we're making basically all-time highs by the end of the year. 92% correlation, but not a lot of momentum. 3 bullish, 3 bearish, so market model is kind of uncertain about how much further can the market go. So that's seasonal chart. The prices, another common question, where do you find the prices for, let's say, active trader, right? IR, how did you determine 125 strike at 680? Where's this magic number came from? It came from stock forecast toolbox, right? For each stock in ETF, we make a prediction in terms of support and resistance. Here's the support, here's the resistance, uptrend. We predicted the low to be 130.64 today, right? So based on that price, 130.64, you can see 125 strike. If you buy 125 strike, 130.64, based on predicted low, it's $5.65. So 130.64 minus 125 is 5.65. This is where this price came from. This is based on predicted low. Or the other choice is just to buy it based on previous close, which is 130.65, happened to be the same price for today. Terry question, which is it free? I'm not sure what Yellow Tunnel. This service is not free, you have to pay, but the webinars and the blog, all of these services are free on Yellow Tunnel. And same thing on Tradespoon. The tools are paid services, but we do have market newsletters, and these are free, right? We have market commentary, we have market brief, and RoboStreet. So all of these market commentary are for free. Same thing with Aggressive Trader. We have Power Trading in Markets, new newsletter that talks about weekly Power Trading Markets, weekly updates. Which sector is leading the market this week, and what is some of the stocks we traded or still are we think that the kind of a trade of the week. So all of these newsletters are free and you can use them. All of the tools are not free. Done. Yeah, so Yellow Tunnel is free. Yes, Yellow Tunnel is free. Where can we look for stocks to sell puts on? Done. It depends on your time horizon. You know, if you're if you're a day trader, you like to sell puts. You know, I personally don't do that, but you can do active trader. But monthly, weekly trader, sometimes I do sell puts. Sometimes I actually sell puts on on the earnings strategy. So if you want to sell puts, monthly trader, longer term signals, or weekly trader, I would start with those two first. Thank you for your question. All right, so we talked about what else is Learning Center. This is also section for free. I encourage you to look at the smart trading guides. So the short-term trading plan that I execute in the live trading room and long-term trading plan for longer-term trades that I execute in live trading room, you can download them here, along with all the manuals for our tools. So all of that you can download under Smart Trading Guides. We also have Active Investor Workshop. We're going to talk about leaps. So every other Tuesday there is an event. It's free. We talk about different trading topics, option trading, charts, strategy roundtable. This is where you are now, and then live trading room. This is a paid membership. All right, any questions? If there's no other questions, that's all I have for today. Happy Thanksgiving. Enjoy your time with your family and friends. Remember, today is a half a day if you are trading. I think market will close at 12 o'clock Central. Indexes will trade till 12:15. Keep that in mind if you're doing day trading. Just review your position in the next hour and a half. Otherwise, thank you very much. Have a good weekend. Enjoy your time with your family. Happy Thanksgiving, and I will see you guys on Monday. Thank you. Robert, thank you.